The average cost of a gallon of gas hit $4.60 in May, up 46 cents in a month. The high price is due to an unusual set of factors, including COVID, the war in Ukraine, and production and distribution limits. And analysts expect gas prices to rise even more over the summer as travelers hit the road. Here are 5 facts on U.S. gas prices. Number 1. The surge in U.S. gasoline prices during the first weeks of the Russian invasion of Ukraine was the swiftest on record. U.S. gas prices jumped from $3.53 per gallon 3 days before the invasion to $4.32 on March 14th, a 22% jump that was the fastest over a 3-week span since the Energy Information Administration began tracking such data. The U.S. imported just 8% of its oil supply from Russia before the war broke out, but the war has severely disrupted global supply, impacting prices here. Number 2. Crude oil prices are down more than 20% from their March high, but gas prices have not experienced a similar drop. According to the Washington Post, gas station owners take losses when prices surge as they try to remain competitive while also dealing with a decline in customer demand as consumers drive less. They can make up for those losses by being slow to lower pump prices as crude prices fall, but they are not likely to lower prices as the upcoming vacation season further increases demand. According to J.P. Morgan, expectations of strong driving demand throughout the summer driving season could raise prices to $6.20 per gallon before Labor Day. Number 3. Gas prices fell to less than $2 per gallon during the height of the COVID pandemic, but production cuts then are impacting prices now. In April 2020, the average U.S. cost was just $1.94 per gallon. Prices were mostly back to normal a year later. But global production cuts amounting to about 10% of overall supply continue to impact the market. GasBuddy's head of petroleum analysis said in March, "We're nearing pre-COVID levels for consumption, but production is still lagging." Number 4. U.S. oil production now is higher than it was when President Biden took office. While some critics blame President Biden for oil supply issues, Energy Information Administration data show that the U.S. was producing 11.6 million barrels per day in March, compared to an average of 11.3 million barrels per day in 2020. The Biden administration issued more than 3,500 new permits to drill on federal land in its first year, 34% more than the Trump administration did in its first year. But after the pandemic slowed down, energy companies have been cautious about ramping up output. In addition, supply chain and labor supply issues have hindered distribution of domestic oil, and the administration has limited supply in some ways, such as a temporary freeze on new drilling leases. Number 5. Current gas taxes average just under 50 cents per gallon, about 10% of the price at the pump. The federal tax is 18.4 cents per gallon, while state taxes and fees average an additional 31.02 cents per gallon. In California, the overall tax is more than 86.5 cents per gallon. Some governors, like Maryland's Larry Hogan, suspended state gas taxes during the price surge earlier this spring in order to offer consumers relief. And that's what you need to know about U.S. gas prices.